communicate with you guys, though.
Well, so anyways, so you got your V cells.
Yeah, I got some V cell. I got stem cells over the weekend, and it was different. It was interesting.
Yeah, so we're gonna see how you feel over the next few days.
I know. So anyway, but yep, that's what I did over the weekend, and got some working out and got some stuff done around the house. But I tell you, by the way, guys, I'm in the middle of a closing, 2 closings actually, literally. I signed a whole bunch of documents right before the show. So it's possible, because the attorneys, changed things last minute, that my assistant comes in during the show. So I'm going to have to sign some stuff. Sorry, but it just is what it is.
This isn't your full-time job running the YouTube channel?
Yeah. So anyway, I was trying to avoid it. Worked on it over the weekend and this morning. But anyway, yes. So, but we are going to talk today about, stocks. And, I think we have to bring up the Russian-Ukraine thing. It's kind of the hot topic. But not necessarily, whether they should be there or not. I think what I really wanted to talk about today was part of the actual physical part of war are the financial moves.
Yeah.
That's what I really want to focus on. So now, obviously, we're not at war, but, and I hope we're not, and it's a horrible thing that we're watching. But you have to pay attention to the financial moves. Mm-hmm. There are lots of financial moves that are happening right now, and more that are coming out today as a result of Russia's actions against Ukraine. So why is that important? Because, guys, we are a world economy. And so the biggest thing that I wanted to talk about, it all kind of starts with this thing called SWIFT, WSIFT, and just take a look at it. And so what SWIFT is, it's the world's main international payment network. Okay, this is really important. So as countries and people do business, then they do it often through SWIFT, and so for sure Russia is being cut off from SWIFT. Mm-hmm. Okay, so the point of this is that now they're going to go after if there are Russian families that have money here, if there are Russian families that have apartments or businesses in the U.S. So you're going to start to see these economic sanctions and these things come across border as a result of all this, and you guys are ignorant if you think that it's not going to affect us. So here's what we know so far, and this is why it's important. This is why we talked about stocks versus real estate. If the stock market in Russia has gone down 50%, like what is that, in like less than 2 weeks? Okay. So there's a really good article that came out. Actually, there's a bunch of these, and this is the only thing I want is, obviously we're not in Russia, but I want you to understand the economic side of this and how it could spill over. And these are things that you should be watching. The sanctions, of course. What's happened in Russia? Russians rushed to get cash, and the country's stock market was kept shut. Okay, so let's just focus on those two things. Now, why is that important? Because in times of crisis, this is what people do. Pay attention to this. Now, I did a video about this once before, and so I'm gonna show you guys this chart here. So hopefully you can see this. So all wealth actually comes from what Chris Martenson would call tier 1 wealth. So this is tier 1 wealth. So tier 1 wealth, what's in tier 1 wealth? Tier 1 wealth is oil, gold, silver, timber, land, water, okay? Natural resources. This is why we talk about real estate versus stocks, okay? So tier 1 wealth would be, think of you own the land that Mobil wants to extract the oil from, or you own the land that Weyerhaeuser wants to get their timber from, or you own the land where the gold company wants and to extract their gold or silver or whatever it is, or you own the land and you have water rights. So this is called tier 1 wealth. it's the most important wealth, obviously, on the chart here. Then what happens is the next tier are companies. So think of companies like, and you can invest directly into companies. You can invest into mobile as an example. You can invest into Weyerhaeuser as an example. But then the very last top part, which is where all the wealth is in the paper part. So they take, you could buy a stock in mobile, let's say, or you can buy a stock in Weyerhaeuser, or you can buy a stock in these companies. The most powerful position that you can be in is in tier one wealth. The riskiest, when the stock markets crash, people lose their money at the top. This is a really important point. And that's what's happening in Russia right now. So the stock markets in Russia are down 50%. Now, I don't know how long it's going to last, but you kind of get the point. The other thing that's happening is, these other countries are starting to impose sanctions. So Japan, Switzerland, Norway. So there's a lot of companies, even BP, British Petroleum, and Germany is saying they're going to stop production of the pipeline, and BP's going to divest from Russia. Norway's going to divest from Russia. So there's all these countries that don't agree with this that are pulling back. Now, this is important, honestly, because as you guys start to see, these things can trickle into your own financial wealth personally. So it can affect our currency, it can affect our stock market. So all these little things that are happening, or these big things, I should say, that are happening, could potentially bleed over into the United States. And we have not come up with a really strong position yet. I wanted to lead with this because, once again, the majority of people put their money in the stock market, in the paper market, and once again, it's the first thing to go. And what do? They have a flight to currency. So people are they're rushing to hard assets, they're rushing to currency, and the people that are sitting in the paper are going to get wiped out.
Yeah, so essentially what he's saying, because there's some confusion here, is that the basis of company are in the bottom tier, and then there's the actual company, and then there's the investment in the company.
Yeah, so again, Mobil Oil, as an example, is just a company that extracts oil from somebody. They don't actually necessarily own the land. So you have the oil itself, then you have the mobile company, and then you have the stock for the mobile company, right? So there's another tier. Come on in. Sorry, guys.
So while he's doing that, I'm going to do some housekeeping here. While he's doing that, I'm going to do some housekeeping here. I'm hosting a webinar March 23rd with Money Honey Rachel. We're going to be discussing all things financial. So she's kind of a financial expert. So to register for that, go to kenmcrory.com/webinar. Free webinar. Learn how to get on your feet financially. Rachel's in her 20s and she's already retired, making $15,000 a month passive income on real estate. Also, make sure to like the video if you guys are watching. Liking the video always helps us out.
Yeah. So again, guys, I don't want to make this about Russia and the Ukraine. What I want you to understand is what's happening on the financial side of it. Everybody's focusing on, of course, the humanity piece, which is huge. But you also have to look at the other side. So they're going to be going after Russian oligarchs, and they're going to be going after their yachts and their jets and those kinds of things. It's I guarantee you watch, it'll come. So the point is, as the sanctions roll out and as this turmoil continues, you guys need to be careful on where it is that you're investing, and that's all I'm saying. Is I was this weekend. I do have some. It's hard to even know. Like when I was looking at a fund I was in this weekend. It's called an inflation adjusted fund, and I'm losing money in it. Like I was looking at it over the weekend. I'm like, how could I be losing money in an inflation adjusted fund during inflation? So I'm like, but the problem is I don't know what's in it, And so you have the very least control of your money. And they're doing it for a reason. And this is why I'm saying at the end of the day, guys, what's important is going to be hard assets. And of course, this channel is all about real estate. But in times of crisis, in times of turmoil, it's happened in the U.S. before, it's happening all over the world. The first thing to go is the stocks. Yeah,
and that's why we're going to talk today about why stocks are more volatile than real estate.
Yeah, and that's the point here. I don't know where all this is going to head, but you should be keeping track of this stuff because these sanctions are rolling out, and they're saying that today there could be a massive collapse of the currency in Russia.
Yeah.
Don't know if it'll happen, but just keep your eye out.
Yep. So one of the reasons that stocks are more volatile than real estate is because real estate, you're the one in charge of your own assets, right?
Yeah.
So that's a big one because you're the one that's actually controlling the assets. You can change the rent if your place won't rent. You can remodel it. You can do some work on it and make it worth more. You have very little control in the stock market and what these companies do.
Yeah. And that's kind of the point. That's why I started off with this rant, about Russia. But it's important because there are, I've been to Russia many times, and it's a nice place. I mean, Moscow's beautiful. It's very expensive, one of the most expensive places in the world. And St. Petersburg is drop dead gorgeous. And I'll tell you, there's a significant amount of wealth there. And these people are doing the exact same thing. Just like we are. It's not, even though it's not good versus bad. These are real good people here doing whatever they think they have to do in that particular market. And at the end of the day, housing is it. You control what you buy, you control how you finance it, you control who's in it, and to some extent, you can control the expenses.
Yeah, and it's never going. Your rent can go down, like that's a possibility, but it's not going to go down just for up and down like the stocks do. So.
Right. And as you guys know already, you just got to follow the math. The rent goes down when there's an oversupply of real estate housing, or there's a massive reduction in the demand of the people trying to get it. So, and those two things are not happening anytime soon.
Tim from YouTube says the only reason he invests in stocks is to remind him why he's in real estate.
Yeah.
Another reason that real estate is less volatile than the stock market is because it takes time to buy and sell real estate. You can't do it at the drop of a hat.
Yeah, it's not liquid. So that's the negative. That's what people would say, that it's not liquid, and it's true. If you own something, it takes time to do a cash out refinance. It takes time to find a buyer. And it takes time to find renters. So real estate is an actual business, and a stock. I don't know about you guys, but there used to be a time when you could see by the stock whether the company was healthy or not. I think those days are long gone.
Yeah, I mean, it's not really tied to anything anymore.
No.
And the apps have made the volatility worse. So like Robinhood and all that stuff, while it's nice because it does allow people to enter the market and control their wealth, it also makes things more volatile because even with GameStop and things like that, everyone just decided that they're going to short the stock, and which is cool in a way they can do it, but it's cool if you're on the right side of the coin.
If you're on Reddit and in the know.
Yeah.
I think like when AMC, I was laughing because AMC had a little run.
Yeah.
Which is a theater company. And during the pandemic when the theaters were closed.
Right.
So I was like, okay, so how does that even work? And so again, it's based on the supply and demand of the stock itself, and so as you guys know, real estate is slow and dumb. It truly is. I mean, it's not super volatile, and that's actually, in my opinion, a massive benefit. The fact that it isn't. If somebody's adding a bunch of homes or adding a bunch of apartments or adding a bunch of rentals in an area, there's a time frame. It's coming. There are things you can do before all that additional supply. There, as companies deployed, let's say, troops out of an area, or a company shuts down, let's say, and it creates a lack of demand in an area, then there are things you can do, and there are moves that you can make with real estate. It happens very slowly, unlike the stock market.
Yeah. And you're not going to have, people can't just buy and sell real estate on a dime. So while we did have that issue in '08, which is probably the worst housing issue, financial issue we've had, real estate did go down, but it didn't go down as fast as the stock market. That happened over years of time and went back up over years of time.
Yeah. It's guys, it's hopefully, it's not that, this is mind blowing to you.
Well, for some people it may be. Some people are, new investors. One of the best things about real estate is it has a barrier to entry.
Yes, it does. But it as you guys know, we teach OPM, or other people's money, or how how to raise capital, how to syndicate, how to buy properties. The properties that we're buying, are using other people's money. And so, yes, it's true.
That's still a barrier. I mean, you still have to raise a down payment, whether it's your money or somebody else's money. You can go on Robinhood and buy $1 in stock.
That's true. Yeah, the one thing that's interesting around the reason you can get leverage on real estate is because the bank actually has physically something to get paid back on.
Yeah.
That's huge. So think about this. It's called collateral. So you're not going to take your stock portfolio. If you have $10,000 in stock, the bank's not going to give you a loan against it. Now, you might get margin against it, but you're not going to get a loan. And, when you go get it, when you actually have something physically tangible that somebody can go get paid back on, that's what they're loaning against. And so the difference is in most cases in stock, you're putting all your cash into a stock market. If let's say you have 100,000 in stock, well, if you have 100,000 in real estate, and it doesn't have to be just from you, you can match that up with 300,000 or 400,000 of debt. So you can actually $100,000 in real estate can buy you 500,000 in real estate. Because all you need is a down payment. You can't do that in stock. So. And the reason is because, again, somebody who's lending you the money is looking at the risk. So if that's not clear enough, then I don't know what could be.
Right. People are asking, Tim's asking, he was taught to keep his powder dry. But what do you, when the market's so volatile, how do you recommend for liquidity besides cash?
Well, I think that there's a couple things you can do. You can keep it in gold and silver, which in my opinion is, you can take a gold coin or a silver coin, literally, and use it, cash it in at anywhere. That's a really good safe. I don't really look at gold or silver as an investment as much as I do as insurance against the currency. Mm-hmm. So I have cash, and I think you have to have cash. Just take a look at what just happened in Russia, is that the people ran to the banks to get cash. That's the first thing that they did. So there's a run on the banks. Who knows whether we'll ever see the truth about what's really going on there with people trying to get their money out. So I recommend that you have some cash and some gold and some silver outside of the banking system. I do. And I don't have it at home either. So, that's there's plenty of places for you to do things outside of that. But a lot of people, if you have that stuff, silver, gold, cash, in a safe deposit box, that's basically in a bank. So there are lots and lots of options here. But I suggest, I've been doing that forever. I don't expect us to have a war. I don't expect us to have anything like that in my lifetime. I'm hopeful. Maybe I'm being naive. I don't know. But the point is, I have it anyway. Why wouldn't I? Why wouldn't I have a plan B just in case something happens? In my lifetime, I've seen runs on banks in Croatia. I've seen runs on banks in Venezuela, Zimbabwe. Now we're seeing it in Russia. So it can happen. And if you go back into history, it has happened. It has happened in the U.S. There were banks that closed. Now, way different times today. So I'm not a conspiracy theorist, but why wouldn't you have a plan B? So for me, I have cash and things that I can exchange. You can do that with diamonds. I know friends that do that. They jewelry. I mean, honestly, I know we're getting into the weeds here, but you can throw on a $50,000 Rolex and basically get on any plane anywhere. So
yeah, and you can also just save.
You could do.
Well, you can also just save for the down payment. I know that's what we've been doing. We've just been saving enough for a down payment, buying a property, because then you own an asset with the down payment money.
Yeah. We're putting our stuff into hard assets, and in our little market here, rents are going up like crazy, and so is real estate, because there's so many people moving to Arizona at the moment. So we're focusing here. It's on fire. It's hard. There's lots of people lining up to try to get deals, and so it's a good time to be a landlord, not necessarily a good time to be a renter.
Yes. Matt was saying it's really hard to get a HELOC right now, and that's because banks are tightening lending. So that's kind of interesting. I haven't looked at getting a HELOC in a while, so that's kind of interesting.
Yeah. Yep.
And number 4 of why stocks are more volatile than real estate is we were saying, you own a hard asset. So hard assets have supply and demand, and that's how they run.
Yeah. So again, guys, go back to this chart that I showed you before. If you own these hard assets, whether it's land, whether it's farming for food, whether it's water. I own a resort in Sedona, and the reason I bought it was because of the water rights. I actually have the water rights, which predate Arizona. They're hard to get, but that's why I bought the property. It's covered by, it's a resort, so my tenants, or the people that actually go there and stay, actually, I think our room rates are around $400 a night. They're paying for the actual resort. So I have the land, the water rights, all the stuff here, but they're paying for it. If I wanted to take that public, then of course you all could buy a piece of that in the form of an ETF or a stock or something like that. And that's how it works. So yes, hard assets are always going to be at the base of every single wealth. On any kind of collapse ever, stocks will go, companies go, and then at the end of the day, it all defaults back down to what I would call the tier 1 wealth.
Well, yeah, because still in Russia and Ukraine and everything else, people still are living places, and they're still having to pay rent. And it might have to be adjusted or, based on what the possibility of paying, but they still need it. They don't really need stocks. They're not worried about that right at the moment. I mean,
obviously, it's highly likely they're not paying rent. It's highly likely that people aren't going to work and all those kinds of things. So it's, but the point is, again, we made it through the pandemic, and the worst thing that a country wants is homelessness. And so you're right. They're going to default to shelter.
Yes. And then also, the stocks have no real basis anymore. I mean, it used to be, the stocks were measured on a company's performance, but now that it's not, it really is all about feelings and emotions and word on the street and where to invest.
Yeah, and I mean, we did a video on Evergrande, which was the big real estate company in China, and just go Google that. That should surprise you and should freak you out. Essentially, it was the largest provider of homes in China, and a lot of U.S. investment into that. And a lot of people lost a lot of money through Evergrande. It was kind of a hot topic for about a month, I guess. Nobody's talking about it anymore. But again, the point is, the most risky spot you can be is going to be in a stock or an ETF or something like that.
Yep. And people are asking, if they're going to, because they live in California and other places, and they want to invest out of state. I mean, how do they pick a state to invest in?
That's a really good question. We talk a little bit about migration patterns, and what you want is, ideally as a real estate investor, you want low supply, high demand. That's what you want. So doesn't matter what you're investing in, just think of those two things: low supply, high demand. So that could be anything. You could literally be a restaurant owner. If there's high demand and not very many restaurants, you're going to have a line out the door, and there's going to be a waiting list, and there's going to be reservations for a long, long time. It could be housing. It could be whatever it is. It doesn't really matter. So you want to try to find where people are going, where they're putting all this pressure on the different types of towns and cities and counties and states. And right now, it looks to me like, based on the numbers, based on the math, which is the Texas, Arizona, Florida, and North Carolina happen to be the 4 biggest states for growth. But that doesn't necessarily mean that everyone in Florida is growing or everyone in Arizona is growing.
Right.
So, you have to then dig down a little deeper and make sure that you're going to the right spot. Because, who wants to live in Midland, Texas right now, as an example, which was a boom during the oil time. But right now, it's not. But, who knows where oil will go.
Well, now that we're not getting it from Russia anymore.
These are things, guys, that you need to watch what's happening, because as prices go up on things, production can actually go up. There's lots of chess moves that are happening right now. Just keep your eye open and watch as this stuff ripples through the U.S.
Yep. So people are saying, okay, but if you go to a spot that there is high demand, is it going to be too expensive?
It could be, absolutely. Yeah. I mean, that's essentially what California's been forever.
Right.
So all that's happening is, we're putting a lot of pressure on other areas. So
right, but it just has to cash flow. If you're going to use it as a rental, it just comes back to cash flow.
Back to math. What's the price minus expenses? What's your mortgage and what's the rent? And does it cash flow? So it's really that simple.
Well, and I want to explain to everybody listening, because we do have some people that are probably invested in the stock market that are thinking about the real estate market, as to why we prefer real estate over stocks. There's some major benefits. And why we think that you could make more money long term on holding your cash flowing properties. So, I think people tend to forget your tenant is paying down your mortgage when they're paying rent.
Yeah, and people don't need stocks.
Yeah.
They need housing. Like, look at the basics. So, fall back on that. But you're right. That's a hell of a point. I think at the end of the day, you look at the need. Where do things fall? And I think affordable housing is probably going to be the biggest issue over the next 3 to 5 years.
Yes, and you're always going to have a need. People need places to live.
Period.
And then on top of when you rent out your place, they're paying down your mortgage, and if you have a good investment, you're getting some cash flow.
Yeah, like why wouldn't you buy something that somebody else pays off? Like,
right.
Guys, wouldn't that be nice if somebody paid off your boat, your house, and all your home improvements, all the, paid off your vacation, all that kind of stuff?
Yeah.
It can be done.
Yep.
You can do it through investing. Obviously, I have so much real estate investment now that there's so much cash flow that it basically buys me whatever I want.
Yep.
I mean, affords me to, get a second homes and a jet, all kinds of nice cars, and go on vacations, take time off, whatever I want. That is the point. The point is to get your freedom back.
Yeah.
Period.
Well, then you have your tax benefits.
Yeah, massive tax benefits.
Massive tax benefits.
You've got, most people don't talk a lot about depreciation, but the IRS allows you to write off your investment. If a commercial building, I think is 31 years, multifamily is 27 and a half. So you get a chance to depreciate. You have to back the land out, but you have a chance to depreciate. And what does that mean? What that means is you can actually cash flow and actually report a loss. So you can actually have cash flow, and then after you add depreciation expense in there, which is a non-operating expense, you actually can report a loss on your tax return. So you get the cash and you report a loss. And so depreciation and even bonus depreciation, cost segregation, there's all kinds of things that you can do. And because it's a business, and if you're a real estate professional, there's massive more benefits on the tax side. There's so many.
And then lastly, it moves with inflation, which is a big deal now. So if you get that set rate fixed loan and your property is moving with inflation, your rent's moving with inflation, and it's going up, that's going to be beneficial to you.
Yeah. So, I know you guys think you're all rich because of your, homes have gone up, but all you got to do is take a look at what it costs to build a new one, and you'll see it's 40, 50, we're seeing massive 50,000, 60,000 more than it was just a couple of years ago. Those are real costs that are added to a home. And so therefore what it does is it raises prices of other homes. So it's not just supply and demand. In some cases, it is the actual supply chain issues or inflation for lumber, for wire, for appliances, for sheetrock, for concrete, whatever it is. Those things have all gone up. So as those home prices go up, it's just going to push more people out of the market, unfortunately. But if you own something, then of course you're rising with it. So it is a form of inflation, and that's what's happening. It's called a cost push type of inflation. You got cost push, you have demand pull. And in this particular case, there's actually kind of both going on. But cost push, if you have a home that's being built next to you and it's 50 or 75,000 more, and you've owned that home for 10 years, your home's going up. So that's just how it is.
Yeah. So anyways, we really feel like real estate is a much better investment than the stock market.
Yeah.
We're real estate people. Of course, we're a little swayed, but we've done our research and, Ken obviously knows. So, before we get into our premium questions, I wanted to remind you guys of the webinar with Money Honey Rachel, March 23rd at 5 o'clock. Register at kenmcelroy.com/webinar. That's going to be great. Like I said, she's made $15,000 of passive income per month in her 20s. So if she can do it, anybody can.
We had her on before, and it was a great interview if you want to take a look. The other thing is, guys, I'm doing a live event right here in Scottsdale.
Yeah, I was going to mention that. So you're doing a live event. It's a Limitless Expo. It's in June.
The 9th, 10th, and 11th of June, right here in Scottsdale. There's a website called Limitless Expo, expo.com.
And I just put that in the show notes.
So we've got all the Rich Dad Advisors coming. We've got a whole bunch of really, really incredible speakers coming.
Yeah, and it's not a real estate conference, right?
No, this is about education, financial. It's called the Financial Education Expo. So we are going to have a tax person there. We're going to have a legal there with syndication. We're going to have a lot of business owners, a lot of entrepreneurs. And I'm actually looking for a crypto person, one that, isn't so biased against their own crypto.
Yeah.
So we're actually
open-minded crypto person.
Yeah, we'll try to find an open-minded crypto person. So we're trying to find somebody who can teach crypto. There'll be no selling from stage, period. That's the number one goal. There literally will be no selling from stage. So I'm doing it with my good friend Tarl Yarber. Brandon Turner's coming from Bigger Pockets, and he's bringing a group of folks, entrepreneurial. We're going to have some YPO people there, some EO people there, some Tiger 21 people there, some GoBundance people there. So a lot of these folks are going to be coming and speaking about their own individual businesses. Now, and we will have an exhibit hall and all that kind of stuff, and we'll have sponsorships and all that we'll be rolling out soon. But it's going to be fun.
Yeah. So I just put it in the show notes, limitlessexpo.com to get your tickets. Tickets are discounted now for the next couple of weeks. So now is the time to get them.
Yeah, they go up actually March 1st.
No, I think we switched it to March 15th.
Oh, okay. Yeah.
Yeah, March 15th, the tickets are going to go up. So check it out. So let's move on to our premium questions.
Yeah.
If you guys want to join Premium, we have a 7-day free trial at Premium Live, and that is kenmcelroy.com/premium, code Premium Live. You can ask Ken a question, and he answers all of them.
Yep. Yeah, I'm enjoying this, guys, by the way. Yeah. I love all these questions coming in. Thank you.
Yes. So Alex from Premium wanted to know, at what point should I justify quitting my W-2 job and doing real estate full time? full time. I have 11 single family rentals and my net cash flow is 10 grand a month. However, my W-2 job is about 350,000 a year and the W-2 job is making the loan approval process easier.
Yeah, I would keep it then. I mean, if you're going to stay in the, here's the thing, like, hopefully you're working from home. I don't know what that means, but what I hope it means is that you can do your job from anywhere you want. And if it's helping you and you're first of all, congratulations. It sounds to me like, Alex, you're doing a great job. The other thing is, I don't know how volatile your W-2 job is. It might be super strong, and you might, if it's not creating a lot of time, it's very competitive right now. I think eliminating that safety net personally, and a time like now where there's so many syndicators, and we have a whole generation of, I'm going to call them kids, that have never seen a downturn, and they think, oh, if I buy something, it's going to go up next year. So it's probably not the best time to jump out in that arena. It sounds like you're doing just fine. I would just chip away. You probably have a fair amount of net worth here too, which is good. And then just keep harvesting that and doing it the way you're doing.
Yeah, but then when you get to the point where you're making enough that you're okay with it monthly, then that's the whole point, is to get that financial freedom. I mean, if you make 350 grand a year, 10 grand is probably not enough per month to live on.
And I didn't say that he might not.
He or she.
Depends. He or she. Yeah, it might be. Are you enjoying it?
Yeah.
Like, I mean, that's actually the biggest thing. Like, I'm involved in a bunch of nonprofits. Of course, I make zero. I enjoy it. So you're getting to the point now to where you kind of get to decide, like, what floats your boat. What do you want to do? Where do you want to be? And that's you're heading into a very, very fun time, Alex. So, congratulations. And at some point, that'll be a shock to you, right? But $350 a year, I don't know, that's maybe $250.
Jason from YouTube says that's $30K a month. Keep going to work.
Yeah. Versus 10.
Yeah.
So yeah, I think that's probably wise advice.
So Jimbo from YouTube, this is a good question. He said, should I be looking for below market deals, or can I start building my portfolio with rental ready homes?
Again, it's just math. Obviously, when you say below market deals, who doesn't want those?
Yeah.
Everyone. So, yes. Yeah.
But I think that what he means is they're not rental ready. Like, they need work.
Got it. Yeah, listen, that's a different kind of a business. One's a kind of a lock and leave, and I'm not saying that you can't do it. I like the the value adds personally. I like below market.
But if you're a newbie investor, do you think he should start there?
It just depends on the level of experience. I was talking to a friend of mine the other day. He's a handyman. He owns his home. He has a ton of equity in it, and he has one rental. And so he personally, he's like, I'm thinking about buying a duplex and living in one side and fixing the other side. That makes sense all day long, right? And I'm like, great. And then you move out and you fix the other side and you rent it. That's a good strategy. It depends, again, how much time you have and what your skill set is. If you're going to jump in as a new investor and you don't have the network and you don't have the team and you don't have the skills, then you're probably better off doing the
rental ready.
Yeah.
Yeah, and you just have to find a property that cash flows. They're out there. They might not cash flow much, but if you can find one that cash flows, and then just you have your rental appreciation over time.
Yep.
So Barb from Premium wants to know, this is a very key one, something that we are kind of dealing with now. If someone else is living in a rental house other than the renter whose name's on the lease, and that person's name is not on the lease, is that okay?
I'll let you answer this one. We literally had this conversation.
We had this issue this morning. So basically, anybody that lives in the house that's over 17 years old needs to be on the lease. There's two reasons for that. One, you have to do a credit and background check on them because they could be a sex offender, they could be a felon, and then you're going to have some major issues. Because if only your tenant's name was on the lease, they might not be able to pay the rent on their own. And then you can't tell them that person can't live there anymore once they're already there. And then the other problem is that on an eviction standpoint, right? So if there is an issue and something happens and you need to evict somebody and this other person's living there and you don't have a lease with them, it's going to make your eviction a lot messier.
Yeah. So think of think of 2 bedrooms across the street from a university, where you have roommates, cycling in, right? And this happens because I have properties near universities. This is probably one of the better examples. You have to know who's living in the place. You have to know who they are, and you have to have access to where they're working and all the information from them, because you can't have, like in a university setting, you don't have one person responsible and 3 roommates trying to pay that one person rent. So that's a nightmare for everyone. So everyone needs to have their piece. Everyone needs to be responsible.
Yeah. And you have that a lot. Like we had this recently where, this girl was moving in, and then this person she wanted to move in, he didn't really want to fill out a credit and background application, and she wanted to take on the whole lease on her own. And the problem is why, right?
Didn't you have a drug dealer too once?
Oh yeah, I had a drug dealer. Same issue.
Obviously a drug dealer, has a load of 20s. Is not they're not they probably don't have a W-2 income coming in, so he fronted it, right?
Yeah, and then on other issues, it's like, why don't you want this other person on the lease, or why don't you want them to fill out a credit and background check? And these are all these little red flags that you guys are trying to fill your units, and you can make a big mistake by putting somebody there that's not there. And if your tenant, I had a tenant one time where she moved in her boyfriend when she was living there, and I just told her, hey, because I stopped over one day and I just said, hey, he's got to be on the lease, and we had to go through a full thing where we added him to the lease.
Oh, by the way, that helped you. Remember?
Well, it did help me
moved
because
out. I forgot about that.
Yeah, because I had them pay an additional security deposit because there was another person living there.
And he had a dog or something?
He had 2 kids.
Two kids.
So they had him and 2 kids living there, and they did a lot of damage.
That's right.
And because he was on the lease, I was able to collect from everybody.
Oh, I remember he was pissed.
Oh, he was so mad.
Yeah, but what happened was that you checked, and he had moved in later.
Yep.
And so then you took action and had him sign up. And
they didn't want him to be, and he didn't want to be. And, but he's going to live there. He's got to be.
Right.
I mean.
So, you want to know who's in your place, guys, period.
And for your neighbors, too. You have to know for them, too. If you have a sex offender or something living next to your neighbor because you didn't run a credit and background check on somebody, that's on you. That's your fault.
Yeah, that's a really good point. Like, you guys, there are things that fall on the landlord, responsibilities. And if you have somebody living in your unit and you don't know who they are, that's on you.
Yeah.
There can be things that happen, and God forbid there's, some kind of crime or something bad, or even fire or whatever. And if the insurance companies are going to dig down on all of that, and if something happens with somebody that's living in your unit and they bolt, you're going to be holding the bag, especially if they're not on a lease.
Well, and this happens with animals too, right? So I've had people try to move into my properties, and they say, oh, what kind of dog do you have? And it's like, oh, they're just like this mix. Like, they're not aggressive, Yeah. And then I make them send me a picture of the dog, so I have it on file. And they send me this picture, and it looks like a pit bull. And no offense against pit bulls. My friend has a couple of them. They're great.
They're sweet.
The problem is your insurance doesn't cover pit bulls. So most insurance doesn't cover aggressive breeds.
And there's a reason, guys.
So everyone thinks their dog's the best dog in the world, and we even have a border collie that bit somebody one time. So I mean, but the problem is they can do damage, and then you're putting yourself at risk because your insurance won't cover it because you're not allowed to have those kind of dogs there.
But I remember what happened was the woman said, I have the dogs, and you said, one, I need a picture. So then you got the picture, and you've identified the breed, and then you called the insurance company.
Yes, I did.
And the insurance company said, we will not cover these particular breeds. So you did as a landlord, you did the homework, and then you were able to tell the applicant, I'm sorry, but my insurance won't cover your breed.
And how do you deal? This is a good question because this does come up. How do you deal with the person that's like, oh yeah, well then I'm just gonna leave them at my mom's house, or oh then my boyfriend's not gonna move in with me. It's just gonna be me. Hint, hint, wink, wink. What do you recommend to people when that happens?
Sure. Well, I think that again, it just boils down to what's in the lease. So if you just say to them, okay, so if that's the case, then I'm going to spot check, and if I'm going to come over there and I'm going to evict you if I see the
the animal, the person,
animal there,
whatever.
or whatever, and you have that right. So everything needs to be on the lease. The number of people in the unit, you actually should have the cars that they have, where they work, obviously emergency phone numbers for people. There's so many things that need to be in that lease. They should all be there. What you want is everything on that.
Yes. And Jerry had asked, what about job changes? Are they required to tell the landlord about that?
No. I found that's a good question. Though, but we haven't. There's no requirement in the lease that says if you're unemployed or there's a change in your job. But once you're running their credit basis, same thing. Obviously, like if you buy a car, as you guys move around and you move to different states and you go different. You upgrade your living, or whatever it is. There are things that change after a certain period of time, and then there's no requirement in the lease as of now, at least. That's where's all this heading?
Yep. And Low Rotor wanted to know about service dogs, and with service dogs, you have to take those, but we need all the paperwork. So we don't just need the basic paperwork. We need a doctor to call to verify and all that good stuff that. Yes, this is this doctor. This is their office. Yes, they can verify that this person needs a service dog.
Yep.
Don't think you're going to have a pit bull or an aggressive breed service
animal.
animal.
Well, I don't know. Here's the thing. Service dogs kind of got out of control. People started using them. The most obvious was on the airlines, You remember our friend Seth said,
that was the best story. He was by a pony on an airplane.
A pony, literally a pony.
A miniature pony.
I was literally in first class, and the guy sat next to me, and he had a Saint Bernard, big, beautiful, most beautiful dog, and so sweet. No issues, but some people. But the airlines are starting to crack down on this, and there's all kinds of online companies that say that they can get you these kinds of things. So be careful with that. But again, if you have an animal that is a service animal, just make sure you have all the paperwork.
Yes, exactly, and verify it with the doctor's office.
Yep.
Mitchell from Premium is asking. Before we get to this one, make sure if you're watching, you hit the like button. It really helps us out. So Mitchell from Premium is asking, he's in a contract to purchase a duplex with existing tenants. The tenants are long-term, and they've both been there for over 3 years with minimal problems.
Nice.
However, the rent is under market by $300 to $400. Should I raise the rents as soon as I take over and risk losing good tenants, or should I slowly raise the rents over time by $50 to $100 a year? As it stands right now, I'm only clearing $200 cash flow.
Okay. This is a really good question.
Very good.
So, I think this is probably something that a lot of people are dealing with right now. So what we do is I think that it's within your right to be able to raise rents. I don't know if $50 or $100 is the right number, but if they're $300 under, you should always be, because the next year it could be $400 under. So if you do a $50, now you're further away. Right. So I think you got to kind of take a look at where things are going within the next year. Sit down with the tenant and walk them through, where you're heading. So in your particular case, you increased the rent on your tenant, and they went out and looked. Of course.
Well, they told me to pound sand. They're moving out. That's what she said. Yep.
And they went out and looked, and then they had a change of heart.
Yeah, then they decided to stay running because I still was giving them a good deal. They were still about $100 under market because they are a good tenant.
Yep.
And I had this with 2 of my tenants.
Yep.
And they, but the market has risen.
Yep.
And for them to go find another place, they're not going to be able to find it. And then they're also going to have to pay moving costs and all the other things. So they just decided to stay. And honestly, happily. So sometimes it shocks them. They might get pissed. They might be like, oh, this new guy's charging me $300 more a month. And then they look around and they're like, this is still about $100 under what everybody else is paying.
I would keep it under market though.
About $100 or so.
I would keep it under market. There's no reason to always raise to market. And again, some of it has to do with with your, because in your case, if you're doing 200 a month cash flow, if you raise it 200, you're now doubling your cash flow, which is huge. And you need, personally as a landlord, you need a little bit of buffer there. So that's what I would do, and make sure that if they do move, that when they go look or they're going out and they threaten to move, that the market is much higher than your rent. That's a real important piece, and that's what you did. Yeah, is you made sure that you weren't pushing it to market or even above market, and it was well below market. So when they went out and looked, most people that are renting are not looking.
No, they haven't looked. So they just, all they're looking at is, we've always paid this much, and now it's this much.
Guys, that's the one thing you just need to remember. The tenants aren't sitting there on the internet like you are trying to buy stuff and see how it cash flows. So they're not in tune with the rental market. So in most cases, just make sure that when they do go look, that you are well below the competitor, and that maybe that's $100 or whatever it is.
Yeah, and you'll be surprised. You'll be surprised. I mean, I had to really up my rents to market this year, because I didn't up my rents at all last year because of COVID, and I was just trying to be very nice. So when I upped them this year, a lot of them were big increases, and I didn't lose anybody. Yeah,
the other thing that you can do is you don't have to do 12-month leases. You can do a 6-month lease. You can do a 3-month lease. Not that you want to, but you can do a 7-month lease, 8-month lease, 9-month lease. You can do whatever you want. So it's your place. So you could do, 6 months at 100, maybe, let's say, and then bump them again. Or you can just do 150 for a 12-month or whatever you want. So it's up to you, but just know where the market's heading to. So if the market's heading up, just know if you do a $50 one for 1 year, it's possible that you're going to be way behind.
Right. Exactly. And you're just falling more and more behind, because this is actually a good thing to mention, because what I did, I thought I'd be so nice by not raising my rents last year, and that everyone would remember and appreciate it. So then when I had to raise my rents this year, everyone was pissed because they were so much. But really, if I would have done 50% and 50%, they probably wouldn't have been as mad.
Right.
So
right. They would have been slow progressions instead of big ones.
Big shocks. Yep. So Juan from Premium is asking, I have a rollover IRA with Fidelity. They don't do self-directed. I want to be able to take that money out and invest it in real estate without paying a 10% penalty. Do you happen to know any companies that do this? Or is that a better Eric question?
No. Here's the thing. Fidelity does not have to have a self-directed for you to do self-directed. You can move from company to company. So don't worry about that. But you want to find a self-direct. Just go on the internet. There's a bunch of them. I know that probably the biggest one is, I think it used to be PIMCO, PIMCO, I think. But there's a bunch, guys. So just go look for self-directed IRAs. It doesn't have to be housed in your town, and all you're doing is you're taking your IRA and you're moving it to. It's just like moving a savings account to another bank. That's all it is. You won't have that 10%. Then once it's there, which, by the way, Fidelity is going to give you hell to try to get that money out. Trust me, they're going to paperwork the heck out of you. But once you get it moved, then you can. Now it's in what's called a self-directed IRA. Then you can go invest with that money.
Yeah.
So that's the way you do it. It's you got to think of this as it's your money. You can move it wherever you want. You can have any financial institution you want. However, IRA is protected. And the minute you do anything in your name, it has to. If you invest it, let's say it's ABC IRA. You have to invest it that way. So, and then the rent checks come back there. Everything moves back and forth. So you won't get a lot of the benefits from investing outside of the IRA, but you'll get a lot of benefits for investing with it.
Yes. And Matt from YouTube had a good question. He said, if the rental market starts to go back down, do you drop the rent on renewals for your tenants?
Good question. So, no, although, the first thing that happens when a rental market corrects is you start to see concessions. Mm-hmm. So the first big red flag as a landlord would be concessions. So in other words, people don't go from, let's say, $2,000 to $1,800. That just doesn't happen. What they do is we'll give you a half month free or $100 off the first month, or if you sign this lease, think of, the way that gym membership works. We'll give you 12 months. We want a 12-month membership, but we'll give you 1 month free. So that you start to see concessions first. If you think about it, it really is a rent decrease, right? But what you're doing is you're keeping the rent price high. So maybe the rent's $2,000, but you give them the first month at $1,000.
Yeah.
So you collect $1,000 for that 1 month, but the next month they're $2,000, and that way you're not lowering the rent up and down to the market. You're actually offering concessions. If you're buying a property or you're looking at an area that has concessions, then there should be some red flags for you. So I was just looking at a property last week, and I was like, wow, it actually had concessions on the rent roll and in the financials. And I'm like, okay, red flag on the market itself. What's happening in the market itself? Could be a bad manager, could be a bad management company, or it could be a market issue. So, but when you start to see concessions or discounts, that's the first thing that you see. So it technically is rent reduction, but what you want, again, it's think of the gym membership. You get 1 month free, and then you're paying the full boat. That's what you want.
Right. Well, thank you guys for joining us. Don't forget to register for Money Honey Rachel webinar, March 23rd, kenmcelroy.com/webinar. Also, don't forget to get tickets to Ken's event.
Yeah.
It's going to be June 8th, 9th, and 10th.
Yep.
Is that what it is?
If you guys want to meet Kiyosaki, he's going to be one of the keynotes. Robert Kiyosaki's coming. Rich Dad Poor Dad. If you guys...
It's just going to be a lot of cool people.
Yeah, we're gonna have 40 plus speakers. It's gonna be good. And it's not gonna be a real estate event. It's gonna be a lot of real estate stuff, but it's gonna be about financial education, and we're all gonna try to learn together.
Yeah, learn about crypto, stocks, real estate, wealth, all of it.
And we want to have everyone every sector kind of represented, so that we can make good decisions moving forward. Because as you guys know, I'm not all in real estate either. Yeah. I have lots of different stuff in different areas, and I'm trying to learn as well.
Yep.
So,
awesome. All right. Thanks,
as
guys.
As always, thanks. Cheers.